Okay, hey everybody. Um, I'm still just kind of trying to get set up here. So, um, be perfectly candid, I don't even know what screen you're seeing, but that's okay. I think you might just be seeing me. Um, so I just wanted to get this going early. Um, hope you guys are doing okay. And once I get this going, maybe we'll do a little bit of early just market analysis. Or if you guys have any specific questions about the market, about what's going on now, why don't you just go ahead and ask me, and we'll see if I can't help you out. This is I've taught this type of thing before, but I always do it a little bit different, and so this will be no exception. Um, let's see. Okay. Hey, Terry. Um, should we worry about Bitcoin ETFs over the weekends, like corrections? Um, I think actually, if you're if you're worried about Bitcoin in general, then yeah, because the Bitcoin ETFs, they're spot ETFs. And by the way, somebody asked me, like, so how much, how many shares of like, we'll just call it IBIT. I know it's not IBIT, but I call it IBIT, IBIT. How many, how many shares of IBIT do I need to own in order to, like, what's the equivalent of one Bitcoin? To be honest with you, I have no idea. My suspicion, and Scott would, but my suspicion is that it's probably like now, I don't know, 70,000 to $70,000 worth of IBIT, but I could be totally wrong on that. This really just depends on how you're trading. What I suggest doing with respect to that, and Scott and I've lately on his crypto market mentor, um, uh, yeah, I'll respond to that in a sec too, Terry. Lately in Crypto Market Mentor, I've been getting on there because I learn a lot from Scott. Like, I didn't teach Scott anything about crypto. He's teaching me, by the way. He's an absolute assassin when it comes to that stuff. I don't know how he does it all, but he's young, so whatever. Sure. But we've been talking about, like, how are you trading crypto? My position is, and I've come to adopt this, frankly, because I'm married, and my wife she gets really pissed off when I say this, but she's not home, so I don't care. My wife is a lot smarter than I am. She's innately intelligent. She has a much higher emotional IQ than I do by generations. And a while ago, she saw the way I was trading, like Bitcoin and all that, and she goes, "You buy too, you sell too soon. You always sell too soon. You're always just taking these little profits. We need to just decide how much Bitcoin you want, and then just promise to leave it alone for like 10 years." And I'm thinking, so that means you plan on being married to me for 10 years. Okay, that works for me. So anyway, that's what we did, was just decide to hold Bitcoin for 10 years. It is totally an investment for me. It's not a trade. There are other, like Scott's been crushing it on Solana. There are other cryptocurrencies, I think, that are ripe for trading. You could certainly trade Bitcoin. It's very volatile on a daily and an intraday basis, so you could absolutely do that. I guess you could trade the spot ETFs like this. Not a good day for IBIT. But here's the thing. It's a good day for me. And I'll tell you why. Because let me pull the chart up here. It's not Tasty Trade. That's my actual trading account. Cool. Okay. Here's why. Because we already have almost the allocation of Bitcoin that I've been wanting to own, but not quite. And so I'm being really picky about it now. And I was telling Scott, like, hey, I got the last little bit of stuff to put to work, and so please, Lord, let it go down to 60 grand again. If it goes down to 60, I'm totally happy. I'm in. Now, this, and I'll be talking about some of this stuff in this session about like what the hell are you trying to do here? Why are you trading and all that? But this is different for me because typically if I own something, honestly, I just want it to go up. And when it pulls back, and maybe that's kind of an immature way of looking at it, and it's something I fight. But here's the thing. If you're conscious, if you're aware that you have an issue, an emotional issue with your trading, stuff like that, well, isn't that a good thing? Because you can't change something if you don't know that it exists. I had an old friend of mine texting me saying like, hey, Kramer gave you big props last night on Mad Money. What do you think about such and such? And of course, by the way, he featured DraftKings, said you got to buy it. And it tanked today. So what are you going to do? I don't know the future. But anyway, so the thing is, I know that typically if I own something, I'm just kind of happy when it goes up and I'm not really happy when it goes down. But I've learned to kind of fight that or overcome that in my analysis where I realized that pullbacks are actually pretty healthy. They're very healthy for a stock. It's kind of like taking a breath. It's kind of like, let's say you've got money on a marathon runner and you got a stake in it. You want somebody to win. Well, it's not a bad thing to see them kind of resting at some point, not stopping, but just kind of not just going balls to the wall, all out all the time. That's a really important thing for people to do. And so I look at the same thing. I look at the same thing in trading now, where if I see a pullback, as long as the stock's behaving according to what I've thought that it should be behaving like, as long as, I have a thesis like, if the stock does this, then that's a hypothesis, then it's going to do this. I have an idea of where a stock, or in this case, crypto, is going to go. And as long as it's conforming to my idea, then I'm good. But I never have an idea that it's going to be to the moon, going straight up all the time. And so it is with Bitcoin, because of my time horizon. If this thing falls down, if only, but if this thing falls down to 16 grand again, I'll be putting a boatload more money in, because I'm not just trading the chart on Bitcoin. I'm trading something totally different, and it's not my intention to get into that right now. But what I'm saying is, I have an idea of why I'm holding Bitcoin, and it's not for a trade. Therefore, and so I have this long-term horizon. I'm not worried about quarterly earnings because there are none. Like, there are actually a lot of variables in stocks that you don't have to worry about on Bitcoin. So I actually view it as a very safe place to be going. And I know some of you guys are going like, wait, what? That's just how I view it because of my opinion about it. And that's the way. I'm not even trading it. I just have some of my assets in it. Therefore, and I'm actually answering your question, Terry. Therefore, I don't feel like I have to worry about it overnight unless I miss the 60, unless I miss the 60 grand. And I do have alerts set, but I don't want to be waking up at 3:15 in the morning buying some damn Bitcoin. And I guess I could put in a limit order, but what if it goes to 58? So look, it's a problem, but it's a good problem to have. So you just need to understand, like, why are you trading? And you say you've got IBIT, but it's in a Roth. And so you kind of have both. That's all. That's a good thing. Okay, then one other thing, Richard, and what time have we got? Oh, yeah, I'm kind of overdue here. So just this last question here, and then we'll get going. What do I think about NVIDIA? I think NVIDIA is pausing here for a while. I don't see a big catalyst for the stock to go higher at right now anyway. As you guys know, I've had I think a conservative price target on this of $1,000, and I put that out on Fox at 500, actually at 480, noting that stock has to go through 500 and then it's going to 1,000. So it almost made me look smart. But I do feel like ultimately this is going to run a lot higher, but it's absolutely due for a rest now. So this is not something that I would be eager to buy. And so again, let me get back to the Bitcoin thing. So why are we holding NVIDIA? If you're holding it because it's a long-term investment, look, this thing's going higher. In my mind, there's no question about it. It hasn't peaked. It's going to go a lot higher. But for right now, I don't think so. So if you're trading it, look elsewhere. But if you're investing, well, that's okay. You've got your approach on that as well. So yeah, Joel, it topped out twice at 968, 974 and backed off. Yeah. So are you saying I'm a dud because it didn't get to 1,000? I'm kidding. Okay. Anyway, so that's it for this stuff. I want to get started. But one thing I will ask you is I think I can do this. I don't even know if I can do this on my stuff. What I'm talking about is the emoticons. There's some place here. I don't know where they are. But if you guys can, I think I don't see them because I actually get to I'm actually doing this deal. There you go. Okay. I see it. Thank you. Use the emoticons if you can, whether it's a thumbs up or a middle finger or whatever the case may be. And the reason is because I can't see you. And I really love to teach live courses, like in a room on a stage, not because I'm a showboat. I'm actually kind of shy, even though people don't know that. This is all an act. But if I can't see you, then I don't know if the lights are on or if you're snoozing or if you're going like, none of this crap means anything to me. I wish he'd move on. So you do really help me if you just let me know. If I say something that really resonates with you, or I'm showing you something that really resonates with you, just give me a thumbs up or one of those other things so I know, because this is about you. It's not about me. I know this stuff cold. So I'm doing it for you. So I really appreciate you guys if you'll do this. Now, so I'm going to get started. Can you guys see this screen? Is this where you're seeing it? Just give me a thumbs up on that. So you see this right here. Okay, cool. So let's go ahead and get started here. Okay, Jeff, what tool do I use to track the stocks? I use MarketSmith. There's a lot of different ways I do it. And I will actually get to that. So, all right, I'm gonna get started here. The title of this session that I'm teaching today is Trading Smart, Not Hard. And the reason that I've come up with this, first of all, S.M.A.R.T is an acronym. for things. It's just the way that I look at it. And it's kind of like a 5-letter checklist. My actual checklist is probably about 3 pages long. But most of it, I mean, it might be like, okay, where's the stock in relation to the 50-day moving average? Where's the 50-day moving average in relation to 200? Stuff like that. So a lot of the things on your actual checklist are not going to be, it's going to be a lot longer than 5. But if you just have this category, these 5 categories of things that you need to be looking at before you push the button, before you click the mouse, if you can look at these 5 categories, it keeps you on track. It just kind of keeps you going in the right direction. It's kind of like guardrails. But if you're not doing that, then you can kind of be all over the place. And this has been really important for me because, again, I'm an emotional guy. I can get really pissed off, or I can get really happy or whatever. And, it seems like I spend half my life going like, I shouldn't have said that. And so if I don't have guardrails on my trading, I would be, I don't know what I'd be doing right now, probably bagging groceries. So I need guardrails on my trading. Maybe you don't, but I'm going to show you the things that I do in order for me to stay in this business and actually stay in this game. Because I'll tell you one thing, when you're winning, when you're doing it right, when you feel really good about what you're doing, then it actually is fun. It actually is kind of a game. But when you're not, then it's not a game. It's not fun. It's hard. It's work. And you get all kinds of doubts and be discouraged, and you don't like anybody and nobody likes you, and your wife or your husband or your kids hate you. They don't hate you, but after a while they're going like, Dad's a dud. He's always walking around here like a mope. So if you're trading and it's hard, it's going to make your life hard. It just will. And you know this. You know that it will because you've been through that. We all have been. I'm at a point now, happily, it's taken me a while because I struggle too sometimes in my trading. But Jennifer literally does not know how I'm doing in my trading. I don't talk to her about it. And that means if I'm doing really, really well, if I've had some great winning trades, like, oh my gosh, this is the best trade I've had all year. I didn't expect to make this much money on this trade. She doesn't know about it. On the other hand, if one of my stops gets blown on a gap, or I've had 3 or 4 unprofitable trades in a row to where I'm going like, what the heck am I doing here? She doesn't know about that either. I just leave it in the office, and I'm okay with that because I get to take a break too. I get to take a break from it and remember that my trading is to support my life. My life is not to support my trading. It makes a huge difference how you're looking at this stuff. Hence, trade smart, not hard. So anyway, I'll get started. So I think most of you guys know me, but maybe some of you don't. So I'm gonna kind of go through some preliminaries real quick here. So I have this podcast, which we're starting to put more and more stuff on it. Scott McGregor, my crypto guy, is awesome at helping me out here. He does a lot of that stuff. I'm replacing him with somebody who should actually be doing the administrative stuff that he just does without me even asking him to. But I hope that you'd subscribe to it. What it has been lately is just parts of live sessions, say between me and Scott, or just me talking about things other than, why is DraftKings down today? Stuff like that. So we try to make this really useful and valuable for people. So you can check that out if you want to. Just a couple little things about members that have told. One guy just told me the other day on Monday on the chat space that he's been able to retire early because of Stock Market Mentor and Crypto Market Mentor. So, and that makes me, I think Option Market Mentor too. I don't know. But it makes me feel good when I see this kind of stuff, guys. It makes me feel really good because this is why I do what I do. There's a lot of ways to make money. And I've been very fortunate over the last 15 years to make plenty of it. And so while I'm always happy to make more money, and no, I wouldn't do this for free, money is not my primary motivator. It's actually helping people with their lives. That kind of gives me a higher calling. So I always appreciate it when I'm not going to read all this. You can look at the recording later. But I always appreciate it when I know that people that I'm helping change people's lives. So this is what I thought of. There's a thing. Did you guys know that virtually every movie known to man is built on a hero's journey format? I'll bet you didn't know that. I didn't know that either. I just kind of saw it randomly in some, on some article. But this is the thing. This is your movie script. I'm writing it in the way of a hero's journey. But think about Keanu Reeves in The Matrix. Think about any of Kevin Costner's movies. Think about any of these movies that are just kind of classic movies. Even the rom-com stuff is loosely based on this stuff, but I'm not a movie critic, so I'll move on. So here's yours. These are all the different elements. It's all the same. Okay, your call to adventure. I want to master trading. And then, well, it starts, I'm not sure that I can do it. And then you meet a mentor. This is Obi-Wan. And I'm not talking about me. I mean, maybe not. Maybe it's a book. Maybe you just read, Mark Minervini's got a couple excellent books on trading. John Carter's written one that it's really thick, but it's really good. Any of Bill O'Neill's books, there's several books out there that I believe, and I've given this reading list to some of you guys that are coming to the MTM program, but there are several books out there. You could make those guys your mentor. You could make Jesse Livermore your mentor, but you need to be learning from somebody other than yourself because those are hard lessons. So then you finally cross this threshold. You go like, I can do it. I'm going to do it. And then you've got all these tests, all of these, you take a big loss, or you don't have any money, or you lose your job. And so now you think that you shouldn't be trading, any number of things that you've got a lot of tests ahead of you. And then finally, you're in the cave. This is where you really confront your demons. This is where you have all this doubt and you have friends. You've heard people say, oh, trading, no. The market's rigged. You'll never make money at that. I know so-and-so who lost X amount of dollars. There's always people with failure stories out there. And you know what? They're true. Trading is really hard, but we can trade really smart if we're doing it the correct way. So at some point, you realize that your challenge is not the market. It's not the tape. It's not listening to the wrong guy. It's not me. Like Fitzpatrick's had 4 bad trades in a row. Well, I need to move on. No, they're not my trades. They're yours. And so ultimately what you realize is that you are your own biggest foe. You're your biggest adversary. And once you figure that out, now you've kind of broken through and you've said, okay, well, hell, at least I know what my problem is. Now I know what my challenge is. So let's go. And this is like the hero's journey that everybody is on. You're on it. And so the question is, where are you? Okay. Now, this is typically what the usual trader believes is, I'm trading and I've got, I read this book and it's awesome. And so I'm going to make a lot of money. And if it's in a bull market, they have this great idea that they're going to make just a ton of money. But then reality sets in and you realize there's all kinds of things going wrong. And your reality is this, and your road to success. Guess what? This says road to success. This says welcome to success. You're still on the road here. There's a lot of zigzags ahead. And here's a memo to you. You're never going to get it perfectly. You're never going to get it right. If you're a golfer, you're never going to shoot an 18. Now, I've shot an 18, but I'm just talking about like the first 4 holes. But for somebody for a golfer shooting around a golf, you ain't going to get 18. Everything is a series of misses. And so you're going to find this in trading as well, that you're never going to get it right. You're going to make mistakes. You'll make a lot of them. Mark Minervini is a good buddy of mine. We were talking a couple, 2 or 3 months ago about this thing of mistakes. And he said, I make a lot of mistakes. I can't believe how many mistakes I make. I just don't make big ones anymore. And so once you get over this idea that you've got to be perfect, and I've had people in the past, not for a while, say like, well, what's your track record of wins and losses? Because if you can guarantee me that you can, some guy actually emailed me this. If you could guarantee me that 75% of your trades are profitable, then I'll subscribe to your service. And I'm going like, dude, do you really think I need your money that much? So you got to have your own standards. Just make sure they're realistic standards. Okay. Now, I talked to Steve Burns a while ago at New Trader U about the reasons that people lose. And he said the biggest 3 reasons, and then he gave me 4. Gambling, they don't have an edge. They trade emotionally. I've just talked about that, or they're trading too big. So I asked that question in our trading room. You guys throw me a bone if any of this stuff makes sense to you. These are like quotes from people doing the same stupid stuff that I know better than to do. When I stay with my specific patterns, I'm successful, but I get FOMO, fear of missing out, see things that aren't there. You can read the rest of these guys. It's all like the pain of selling at a loss. Here's the thing though, with that, like people say like, oh my God, it hurts so much to sell at a loss. You listen to me. I'm giving you pearls here. You have to get good at losing. You have to say, you know what? Yes, I'm taking a loss here. Because as soon as you can get good at losing, you can get on with the practice of winning. Because if you fear taking a loss, you're not going to take a small loss ever. And I'll tell you why. Tell you exactly why. I've been there. I invented this rationale. Because if you're losing, but it's not a big loss, but if you're losing, you're going to say like, ooh, I don't want to take a loss. Well, you know what? It's not that big. I'm just down, 7 or 8%. Oh, I'm down 10%. That's okay. It's not that big a deal. I won't sell. And then it goes down more. And, oh, well, that's, geez, I thought it'd be coming up by now, but you're afraid to take a loss. And pretty soon that afraid to take a loss morphs into afraid to take this huge loss. I can't afford to take this loss. And so you know what happens then? The stock keeps going. And right about the time that you say, all right, I can't take it anymore, somebody get me out. They're happy to do so. You're selling your stock and somebody else is buying it right at the low. And so this pain, this fear of selling a loss is the one thing that will cause you the biggest losses you can ever imagine. And that is the truth. So I'm spending a little bit of time on this. I hadn't planned on it. I want to just bang through these slides, but that's a really, really important thing. You never want a dollar cost average. If you're losing, you're losing. Don't put more money into it. It's a silly thing to do. It's like buying, yesterday's lottery ticket because, it didn't win, but it was close. Don't do that. So these are all reasons why people really, really struggle. Again, I'm not going to go through all these because guess what? You've probably made some of them. But here's the deal. We've gone through a lot of these things, guys. Now, most traders make a lot of these different, think about how many of these are. And these are just some of them. Like these are some of the losses that some of the reasons why people struggle. So how many mistakes do traders make? It would seem like they make a lot of them, right? Well, they don't. If you think about it, you could go through that whole list, and on several of them, you'd go, oh, yeah, I did that once. But for most of you, you'll look and you'll see that 2, maybe 3 mistakes are the ones that you make predominantly. Some of you, maybe just 1. But see, this is a good thing, because if you see you're making the same mistakes over and over again, then at least you know what to fix. If you don't know what's wrong, you just know something is really wrong, then you're really in a heap of trouble, because it's almost like, well, don't just stand there, do something. Well, yeah, but sometimes standing there is the best approach if you don't know what to do. And trading is this way too. You want to be at a point where you see, okay, what am I doing wrong? Okay, got it. Now, what do I need to do to fix that problem? If you can't go through that sequence, something's wrong. What is it? Okay, got it. What do I need to do to fix it? Okay, that fixed the problem, kinda, but I keep going back to that. Okay, fine. Again, you ain't going to shoot an 18 ever. So the point is, once you understand what your big flaws are, those are the things that you focus on fixing, and you will be absolutely amazed at how gratifying that is when you look at your track record now versus where it was a year ago. Or let's say you're trading the smart way that I'm showing you here. And you trade this, so you're making a bunch of mistakes. And then in 6 months or a year from now, you look back at where you were right now in March of 2024, and you see the progress that you've made. I just lost my camera, I see, but you know what? That's okay. You don't need to see me anyway. So I'm going to go ahead and shut this off. Hey, you guys, give me a thumbs up if you can still hear me, because it's looking like the whole thing is just frozen. Okay. Wow. Okay, you guys still there? I don't know what happened. Maybe we didn't pay our internet bill. Okay, so we're back online. You guys can see me okay? Can you see this deal? Okay, cool. I'm just going to keep going. I don't know what's going on, but it's Murphy's Law. So here's the thing. All your mistakes come from 2 demons. You're still seeing this, right? Okay, fear and greed. These are the 2 things that are going to hurt you the most, like in a big, huge way. They're going to kill you. And so the thing is, if you're working so hard that you're not getting paid, then when you really think about it, what's going on? All you get is tired. I mean, and I've been here too. I've been here. So here's the thing though. If you don't know what's wrong, you can't fix it. So we're going to make this real simple today. I have this idea, this theory about, is this recording and given out? Are you guys still okay on the, okay, good. So sorry about that. It kind of freaked me on my camera, and it's probably, okay. All right. So we're back. Whatever. Anyway, I like to turn question marks into exclamation points. That's, to me, that's what really kind of gets me off. So here's my objective today, is to teach you how to trade smart, not hard. So this is it. And you're going to get this video. So take notes now if you want, or just listen and watch, and you can go back later and review. But this is a process of stock selection. Like, no stock, any stock will do. No, it won't. So we'll look at some basic things on how to, how to get you in the right stock at the right time. And then also measurable and meaningful. In other words, I'm putting my money at risk in a stock. Is this a good stock? Is this a good trade? Is this a good risk reward trade? I'll show you about R multiples, which most people haven't heard of. Everybody should. So we're going to talk about that. And then, is the move attainable? I talk about envisioning. If you're looking at a chart of a stock that you want to buy, okay, ask yourself, where does the stock need to go in order for me to make money, in order for me to say, yes, this trade worked? Envision it. Think about it. Draw a line. And then ask yourself, have I seen this chart before? And if you haven't, then you're operating on a this time is different mechanism, and that never works. Every so often it works. Hopefully it works before you go broke on all the this time is different trades that actually turned out not to be different. Okay, so it's really, really important that you figure out whether something is truly attainable, and that comes from understanding charts and throwing your subjective mind aside and just looking at measurements, looking at the things that you have to realize 98% of things you cannot control. You have no control over it. For example, I have no idea why DraftKings fell today. I'm sure it's some kind of news or whatever the case may be. I don't know. I had no idea that it would do that. So do I feel bad about it? No. It's trading. The thing that you can control is what you do. That's the only thing you can control. And so we want to know whether something that we're doing, does it have a snowball's chance in a furnace of doing it? So that's really important. And then we always want to assess the risk and reward of any given trade, because what are you doing? You're exchanging for cash for stock, or you're exchanging your stock for cash. You're just making a value exchange. That's it. And so there are risks associated with that. And also, in this time frame, has to do with the S.M.A.R.T. Everything is time frame. Like I was talking before I started this on about Bitcoin and how we are looking at Bitcoin. We have a certain time frame on that. If I'm in a day trade, it ain't going to be a 10-year trade. So you need to know what your time frame is. So we'll start here with stock selection, guys. So when you're buying a stock, we're just going to talk about buying, not shorting. Okay, when you're buying a stock, you want to start by looking at the fundamentals of the company, and then also the technicals, the chart and the spreadsheet, so to speak. It's really important that you do that, because at least for my style of trading, why do we really care about the fundamentals of the company? Because really, you make your money on the charts, because the charts track price action, and you make your money by selling higher than you've bought. The reason that you focus on the fundamentals to begin with is you need the wind at your back. You need the wind beneath your wings, right? And frickin' Fidelity is the wind beneath your wings. BlackRock, so-and-so, the wealth manager, such and such a mutual fund. You want to be in the stocks that institutions are in, that they're sponsoring. Institutions are buying that stock, and they ain't buying it for a day trade. They're buying it for a 10-year holding period, or they really like the way this thing is going. I know we've been holding NVIDIA for several years, and I remember in my pension account, which I don't manage, the wealth manager told me quite a while ago, he's going, we really like NVIDIA, Dan. We really like NVIDIA. And I'm looking at the chart, and it's like $150. And I'm going like, this thing looks like crap. Okay, Matt, that's fine. Whatever you think, I'm not going to second guess you. So I'm really smart now, because I let Matt buy NVIDIA at $150. And now it's trading at 902. And yes, we still own it. Do you know why? Because he still likes the company. He's not talking about the stock. And so we want to get where those guys are, and we want to stay there. Okay. So that's our stock selection. And here are some parameters. We need a specific current reason for buying the stock. It has to be a current reason. Why is it? What do you like about it? No, write it down. you need to look at the industry strength. Like, is that, remember, I think they're kind of losing their steam a little bit, but semiconductors have been really, really strong. You could have bought, I mean, NVIDIA is the poster child for that, but you could have bought AMD, Intel, SMCI, hello, of course, Taiwan Semi. You could have bought any number of semiconductor stocks and you're going to make money on them. Why? Because the industry is strong. That's where the institutions are going. That's where the money's going. That's where you and I need to be going. Okay. And so that gets down to this fundamentals. So we say, all right, we like the semiconductors in this case. Now let's dig in a little bit. Let's look at all the different leading stocks in the semiconductor industry. I like to use MarketSmith. I use composite ratings. I use relative strength. I compare them all. You could see that on the weekly chart. I'm not going to go into it here. We don't have enough time, but I look at those things, and I don't want to just pick the leader. Okay, we all know who that is. I want to look at the second, third, and fourth bananas. I want to see who else is there. And I also, by the way, love it when I see all of the competitors with the relative strength of like 94, 95, 98, when I see them all with really high relative strength ratings, and that is the percentage of stocks that they're beating. If I see those, and listen to me here, this is really important. It's a nuance, but it's really important. If I see all the different competitors with a really high relative strength, that tells me that the industry is doing well, as opposed to a stock is doing well. Now, if you see the industry's crap, but you've got a stock that's crushing it, stick with that stock. It doesn't mean, I'm not saying like, no, get out of it because all these other stocks are crap. No, I mean, if you're running a race and you're the only guy without a limp, well, then you expect to win. You're not going to start limping because everybody else does. So stick with what works. However, if you see that everything in the industry is kind of being lifted, well, then fine, get with that leader, but also don't discount the second or third competitors, because it's like the top guy has huge margins. That's just typically the way it works. So there's an old saying that I just made up. Your margins are my opportunity. So if there's big, high margin businesses out there, somebody who's trying to compete can start undercutting the leader and still make money. And so there's kind of a lot to it, but it's totally doable. Okay, you can get all this stuff. So you have to look at the technicals, and are you day trading or are you swing trading? Are you long-term investing? You just got to know what that is. And so we're talking about stock selections here. Is this making sense to you guys? We're looking at quarterly earnings growth and annual. We need to see them actually increasing, not just, oh, they're good. They're making $1.50 a share, which is almost as good as it was last year. No, nobody's going to buy a stock for tomorrow that did better yesterday. We're looking for growth all across the board. Okay, that's really important because that's what institutions are looking for. Okay, nobody wants to buy Zoom anymore. Nobody. Hopefully not you. Why? And by the way, we're doing it on Zoom, and the damn thing crapped out on me a while ago. Nobody wants to buy Zoom because that's a COVID stock. They just don't, because tomorrow is not necessarily going to be better than today. Certainly not better than it was in 2022. So we want the growing companies, revenue and earnings. Not just how much are you making after all the money's after all the money's spent, but how much money are you bringing in? We want to mention this earlier, gross margins. Okay, after the money comes in, after the money goes out, how much is left over? And divide that by how much money comes in. Those are your margins. You want to have high margins, but you also have to understand that they are different. You can't compare the margins of McDonald's to the margins in Meta. They're totally different industries, although Some would say they both serve junk food. That's a joke I just made up. And then also you're looking for a new product and service. Like, what are ones that come to mind? Well, I've been talking about NVIDIA. So the GPUs, I mean, they've been around forever, but they're just they're blowing Moore's law away. That's a semiconductor thing. So we've got high growth in the semiconductor and semiconductor related businesses. But what about AI? So whoever the leader is or leaders are in AI, those are the ones that are going to make all the money, or the crypto space. And I'm not just talking about the tokens, Bitcoin, Ethereum, etc. Talking about the miners. I'm talking about stuff like Coinbase, where they're the exchanges. Those are things all related to a new product. So those are the things that we need. And then also institutional demand. All of these things are really important. And here's the cool thing. I'm giving you this long list of stuff, right? I think here it is. I'm giving you this long list of things that are really important to track. Okay, well, guess what? After you've done this for a while, it's going to take you about 3 minutes to get through this whole thing. Because if you've been trading for a while, okay, well, you know what the market direction is. So that's kind of a no-brainer. You can check that off. Technical profile. Well, you know what that is because you've looked at that first. And if the chart doesn't look good, you're not looking at it anymore. The best fundamentals in the world are crap if the chart does not reflect good fundamentals. So that's why, hence, you're trading technically and fundamentally. They have to line up. If the chart does not line up with the fundamentals, do not trade the stock. If you want to buy the company, go talk to Uncle Warren. But if you're just buying the stock, if the technicals are not reflecting what you're seeing in the fundamentals, something's wrong. Something is definitely wrong. And so these are things that you just know. Institutional demand, learn to use volume. Learn to read charts a little bit. You can see if they're buying or selling. And you can always go to MarketSmith and they have, I think, even just IBD, which is cheaper. But you can find out objective readings are institutions buying and selling. And then these other three, earnings, revenue, and margins. You have to have a source for this stuff. And you can literally, with any kind of experience, look at these things in 3 minutes, maybe 5 minutes if you're slow, and make a decision whether to move on. Okay, so then once you've made that decision, that's just the S. Then we go to this, meaningful and measurable. I'll take the last part first. We want to make sure that as we're looking at a chart, remember I talked about envisioning which way, if a stock's going to go into this time is different mode, which is not good, or it's going to be, oh yeah, it's a volatility squeeze. I see it. I'm not guaranteed that this is going to happen, but I've seen this explosion hundreds of times. So yeah, I think I'm in. So you need to be looking at that kind of stuff, and you should be able to measure it in some way, shape, or form. You should also be measuring your trades, but that's for a different topic. But then you also have to look at it and say, is the move meaningful? Now, if you're day trading, if you can make 1.5% or 2% on a stock on a regular basis, that's a career in day trading, because your losses are going to be really, really small. Like, it's down 1/4 point, I'm out of here. Stuff like that. So for day trading, a profit that's very, very small is really a meaningful profit. But for longer term trading, you need your gains to far outweigh your losses if you're going to make any money consistently, because you're going to be wrong a lot. That's just, you can make a career out of batting 400. Like, you're losing 6 out of 10 of your trades. You can make a career if your gains are meaningful enough. So there's a real art to that. And I'll show you a little bit later. Again, I'm just giving you concepts here. This is not the world of trading according to Dan, but I'm giving you things that you should be looking at. You better know what an R multiple is. How many people do know what an R multiple is? And by the way, are you getting this stuff? Is this stuff making sense to you? Okay, so yeah, this is really, it's very, very critical that you understand all of this. You got to understand the R multiples. And so some of you do. I see some is like, no. Okay, we'll get into that. But the bottom line is this: is the reward worth the risk? As they say, is the juice worth the squeeze? So this is one way to do it. This is back in 2012. So I'm looking at NVIDIA, and I'm thinking about buying some options. You can see what's happening here with the 50-day moving average, and you can see how the price is moving up. So I'm looking at the 50-day moving average, and I'm trying to think, okay, well, what options do I buy? So whatever options those are, that's fine. But in order for me to be making money on them, I need to see the stock get up to this old high here. This is just a chart. It's from a trade ages ago, and the real details aren't important. What I'm showing you is this line. So you just draw a slope along the support lines. Better be trending higher. You see the moving average crossover. So I'm drawing a line here, and I'm saying, okay, if the stock continues to go along this trend, which I believe that it will, I don't remember if it did, which I believe that it will, then I need to be long at least April options. So I'll buy some April calls, and then I can rest easy. It's just early February. Let the stock do what it does. As long as it's conforming to what I think it's going to do, this is going to be a good trade. Should go up to 130, 140, right, by April. So what happened instead? Well, the stock screams higher. This is April, where I'm looking for 130 or 140, and instead it broke way out right through my target, accelerated, and went into a whole nother higher channel. So this was one that performed way better than I had expected it to perform. Of course, I hoped for 4,000 as opposed to 400. But the point is, you want to be taking these measurements. You want to be a thinking person when you're trading, because it will make a difference in your ultimate results. Because here's the thing: it doesn't matter what you think about your trading. It doesn't matter what you think about how you're doing. What matters is, how are you doing? You'd be amazed at how many times that's different. You think you're doing okay, and the only reason you're doing okay is because you've had 3 winning trades in a row. What you're not understanding is why your account isn't doing this. I've been there, guys. I've been there. You got to always see your account doing this. Really important. So is it attainable? You're looking at a chart and you're considering taking action right now. So these are the things that you want to be looking at. How far above the 50? And this, I'm just talking about my style of trading. You can say, well, I look at the 8-day EMA. Fine, I get that, because you're swing trading. That's what you should be looking at. You should also be looking at the 50, though. But the point is, you're looking and saying, okay, how far above the 50 is this stock? Okay, in the past, when it's gotten that far above the 50, what's happened? Okay, because if it's trending higher, this is a pro tip here. If the 50-day is moving higher and the stock keeps going up and never really goes below the 50, why do you think that is? I'll tell you why. Because institutions are buying the stock. And you say, well, yeah, but institutions are buying the stock, but then the stock started falling below the 50-day moving average, and then totally reversed below where those institutions were buying the stock. And my response would be, well, yeah, I guess they're not buying it anymore, are they? I mean, this stuff's actually not that difficult. If you just stop and say, Occam's razor, the simplest explanation is typically the right explanation. Unless you're in politics, then the explanation's whatever you want it to be. But the point is, you got to look at these kind of things. Look at resistance levels. Look at trend lines. Here's one. Ambarella. Look at the 50-day moving average. Okay. It's trending higher, 200-day trending higher. The stock came out of this volatility squeeze in May at about 75 bucks. Within the space of what, a couple months, it went up to about 120, 130 bucks. And now they're reporting earnings. And you're bullish on the stock because you've seen the way this thing's going. And you're saying, like, to the moon, baby. Skylink, let's go. And you're buying this stock, or you're holding this stock because you really like the company and you really think the earnings are going to be awesome. And guess what? They were. The earnings were amazing. And what happened to the stock? Why? Because if the earnings are such where you're looking at it and you're going like, oh my God, could things get any better? Well, if the answer is no, then it's kind of time to sell, isn't it? So this is the best example I can think of why the earnings report doesn't matter worth a damn without a corresponding move in the stock. If the stock's not doing what it should be doing, then you shouldn't be playing in that sandbox. Okay, so with risk reward, the R, S.M.A.R., risk reward, there's two sides of risk. There's the risk of loss. That's the only risk that most people think about. But then there's also the risk of missing out on a profit. And by the way, I'm not just talking about, no, I'm not going to buy NVIDIA at 150 because the chart looks like crap. And then you miss out on this big monster move. Okay, sure, that's an obvious one. But what about, okay, I bought NVIDIA at 150 bucks. Now it's at 200 bucks. I got to go ahead and sell that stock because, man, that's a 33% gain. That's an awesome gain, much better than my typical trade. So I'm going to go ahead and get out of this stock and ring the cash register, and it's all good. Woohoo! So what happened? You didn't assess your risk properly because now the stock's at 900 bucks. And you could say, well, yeah, but you didn't know that for sure. That's right. That's why you sell some, but you don't sell it all, because you're managing both sides of risk. You're managing the risk of loss versus the risk of missing out on a big profit, but also the risk of giving back the profit that you have. That's why you trade in scales. You trade the zigzags as long as they're swimming upward, and you gradually build a position. You gradually get out of a position. And I can tell you this candidly, one of the things that I have struggled with throughout my career, actually, and still until I started really truly tracking my trades, one of the things I struggled with was selling it all too soon. And this whole thing about, like, Bernard Baruch, how'd you get rich? Well, I always sold too soon. Okay, that's a bunch of crap. Okay, don't sell too soon, sell right. You're not going to get it right at the top, but don't just say like, oh, I'm selling into strength, I'm selling too soon, I'm going to get rich. No, do some work, figure your stuff out, understand how to manage risk. Don't plunge, don't get all in. That's what Jesse Livermore did. And of course, he made a bunch of money and had a nice book, a couple of them actually. But you trade in, you manage your risk. You're always managing your risk. And in order to be successful in the market, you need to be making money. You got to be making money. But you're not going to make it all in one trade. That's a lottery ticket. And those people that win the lotteries typically go bankrupt. They also smoke a lot, because I see them in the gas station convenience store. When I'm in there trying to buy a drink of water, they're spending 30 bucks on lottery tickets. And then they're going out and pushing their shopping cart with all the bags and the sign that says, "We'll work for food," down the street. So we're not trading lottery tickets here. We're professional traders managing our risk. I've said this a million times. Trade like an insurance company. Insurance companies would be the best stock traders in the world because they have actuarial tables and they trade odds. Same thing as casinos. You don't really see too many casinos going out of business because they have the odds on their side. So we want to be the house. We don't want to be the gambler. Okay. So you're always asking yourself, is this the best place to put my money now? Because you do have a choice. You could keep the cash, or you could buy it, put in a particular stock. You want the stock always to be better than cash. So, but you have to take some kind of a risk in order to get a reward. And you always have to ask, does the reward justify the risk that I am taking? And so here's what we do. We sit and we wait, and we wait for the limping gazelle. When the gazelles come out of the watering hole and they start to all ramble by, we don't just go out and chase the herd, because most of those suckers are really, really fast. We look for the one that's kind of limping, and that's the one that we buy. By the way, this is the opposite of what I'm talking about in the market, because you actually want to get on the fastest gazelle and go there. But I'm not talking about gazelles. I'm talking about eating. I'm talking about getting a meal. I'm talking about getting winning trades. There aren't that many around. So you want to wait for the best opportunity, to the exclusion of all the noise. And by the way, when you wait for the limping gazelle, a lot of times, turns out the gazelle is the one that's waiting for you. But I always had a stop loss back there, you see. So this was at a wild game preserve that's actually about a couple hours away from where we were. It's for another story, but I actually flew there on Richard Branson's jet with him. And this was the closest that I got to this tiger right here. And that might be a wet spot in my jeans, because this guy, he was eating chicken. That was the other thing. The only time this guy back here had a bag, and it had a bag full of chicken in it. And he would be feeding this lion chicken, like legs and whatever else. And this lion was eating that stuff like you and I would eat pretzel sticks. And I just kept thinking, like, if that guy grabbed my arm, it would be his arm really soon. So anyway, the bottom line is always trade with a stop loss. So you want to have your time frame, and you want to be sticking with it. You don't want to turn a long-term investment into a short-term trade. That's either on the downside or on the upside. Like I was saying, you don't want to buy NVIDIA at 150 and sell it at 200 when there's literally nothing wrong with the stock. There's nothing wrong with it. So you want to be sticking with your time frame. And also, you want to know who you're trading with. Are you trading with the institutions, with the operators? This is a concept from Wyckoff's composite man theory. Do you want to be trading with the institutions or the manipulators? You actually want to be riding along with the institutions and trading with the desk traders. There's a technique for all that. Or the bag holders. Those are the people that are always buying right at the top and selling right at the bottom. I've done that, and it's not a good thing to do. So the bottom line, though, is this: you don't want to replace a calendar with a watch, but you also don't want to replace a watch with a calendar. You need to be not a jack of all trades where you're doing all kinds of stuff. You want to get good at one thing. There's an old quote by Bruce Lee. Since he's been dead for a couple decades, it's old, where he said, "I don't fear the man that's practiced kicking 10,000 times. I fear the man who's practiced one kick 10,000 times." The bottom line is, you find the trading style that you're good at, and then you get better at it. You don't always be bouncing around. And it's taken me a while to figure out the trading style that I'm really good at. And trust me, it actually isn't the way that I kind of had envisioned. I thought that I was kind of a different kind of trader. I'd wanted to be one type of trader. And then I realized after a while, it just didn't fit my personality. But I kept fighting it. And then finally, I kind of adjusted my stuff. And this is the things that I teach you guys at Stock Market Mentor. I adjusted the way I trade And I started making money, not every day, not every month, but I started making money and I continue to make money. Why? Because I'm not a jack of all trades. I'm practicing one kick 10,000 times and it's working. Okay. So, with respect to risk management, again, we're looking at, is the potential reward worth the risk? And I want to talk to you. I mentioned this earlier about R multiples. We want to be in the 3 R's. Now, how many people have no dang idea what I'm talking about here? Any clue? Any clue at all? Okay. So here's the thing. When you're trading, you want to be saying, okay, I'm risking this much money. And that's the difference between your entry and your stop multiplied by the number of shares that you buy. How much am I risking on this? Okay. So how much do I need to make in order to justify my risk? Okay, well, if you're risking $1,000, that's fine. If you look at the trade and you think, well, this thing can make me $5,000 based on all the things that you're doing, not just a guess. But if you're risking $1,000 and you think, wow, if things work out really well, I could make $500. Only time that's a good trade is when you actually know the next card in the deck. And then it's not really a risk. It's like the game's wired for you. What you want to be doing is you want to be risking $1,000 for the opportunity to, say, make $3,000. If you have the opportunity to make $1,000, well, that's not a good deal. That's a coin flip. If you have the opportunity to make $2,000, that's okay. That's okay. But is it really worth it when you can be wrong? Sometimes you're going to be wrong a bunch. So we want to go for 3 R's. The risk is a multiple of 3. Excuse me. The reward is a multiple of 3 from what our risk is. And so this is a trade that we put on Meta. This was last December. You guys that have been members, maybe you'll remember this trade. So we put it on at 323.80 and I set the stop at 314.85. This was a good entry because you could see if I'd bought the day before, it was not a good entry. It was a lucky one, but it was not a good entry because all the stock was doing was, for the 3rd day in a row, farting around the 50-day moving average. That doesn't mean anything to me other than it's watchable, but it's not buyable. But then in comes this day and I see it bouncing off of the 50-day, running up above the prior days, the day before that and the day before that, their intraday highs. And so this to me looked like a buy. And so what am I saying? No, I'm going like, okay, this is a good buy. Now, what needs to happen in order for me to say, oh crap, I'm wrong? Okay, what would need to happen is that the stock would need to fall below this day's intraday low here. The first time it hit the 50-day moving average, in order for me to say, oops, I made a mistake on this trade, stock has to hit there. So what's the difference? The difference is what? About $9. I'm risking $9, give or take a nickel. I'm risking $9 on this trade to buy the stock here at 323.80. Okay, so this is what I use. Trade Track, which is an app that I actually built. I think there's others out there, but none of them are as good as mine. Otherwise, I would use that. And so I looked and I'm going like, okay, I want to buy Meta at 323.80. I'm going to put my stop at 314.85. And I've decided I want to risk $1,000. The account value is $50,000. So this $1,000 amounts to 2% risk. I punch this in, calculate the risk, and voila, this is what happens. Because I have such a low risk, 2%, okay, I can put in, remember, I got 50,000 shares in this account. I can buy $36,000 worth of stock. Why? Because the risk is so small. It's a 2% risk. I can put in almost 75% of my account in this one trade because the risk is so small. Now, why would I do that? Well, because I look at this chart and I see this and I see, well, 340's up there. I look at a bigger picture and I see higher prices. And so I'm going, all right, if I buy this stock right now at this 323.80 and I'm risking $1,000, what has to happen in order for me to make $2,000? Well, the stock has to go up to 341.70. All right, well, that's okay, fine. What about my 3R? Okay, the stock has to go up to 350. Now, that would be an 8.3% gain. So I'm risking 2%. And if I get an 8.3% gain, I'm going to get my 3R. But wait, there's more, as they say. If it goes up 11%, I'm going to get the 4R, et cetera, et cetera. You can look at this stuff, right? So we buy at 323.80. That's the 2R. That's the 3R. That's the 4R. And as I'm looking at this stock, it's Meta, it's under institutional buying pressure. I'm thinking, okay, well, 2R is kind of a no-brainer, but I'm liking this for the long term. So it's worth it to me to take this trade because, again, I'm risking not much money. So I like my chances here. Turns out, okay, this is in December when we're buying the stock, 2023. We're buying the stock right back here. I would say I've got more R's than a box of Scrabble. You know, I mean, this was a monster trade, but it all started with the R multiple. It all started with just me looking at the risk reward and saying, like, is this a good trade for me? Is this stuff resonating with you guys? Are you getting this? Because it's really, really important that you do. So Meta has worked out really well, and we've had other trades on that. Now, I'm talking about tracking trades. This is, again, part of Trade Track, an app that I've spent way too much money on if I'm just looking at the dollars, but it's been free if I look at what it's helping me gain in my trading. But I track my trades. I put them in here. You can see where the entries are. You can see how many days they've been on the list, shares, current shares, whatever. You see the price, stops. I have my stops in here, and I'm also notified if one of my stops is blown. It shows the current price, and that gives me the rest of it here. I'll see, like, oh, on AMD. So I've already made 51.56. I closed that amount, but I still have on open P&L, I still have $4,500 open. Okay, so my dollar amount combining these two, 96.53. I got a 14% profit. So one thing, and we'll kind of reverse engineer it, and I'm not going into detail on this, but so I'm up 15% on this. So I would like to think that that is a 3R multiple of whatever it was when I first got in. If I got in at 151, if I got in at $151, where is AMD now? I'm kind of off the reservation here. Yeah. Okay. So now it's at 178, but I would say I made my R's at one point there. So these are the things that I look at, and it really gives me an idea of where I am. And by the way, there are losses here. None of them are big, though. I'll show you something later where one or two big losses totally freaking wiped out my numbers. And I'm not happy about it, but I'll share it because we want reality here. This is a reality show. So this is the kind of thing I use. I even tag my stuff, like what's going on with the trade, what happened. So the bottom line is this. And again, if you don't, I think Ray Dalio, a bunch of people have said this because it's true. You can't improve what you don't measure. And it does take a while. But if you're measuring something, then you know where your deficiencies are. But it doesn't happen overnight. I will tell you this. I'm not going to get too personal here, but we have Ring cameras everywhere. We're like totally paranoid. I mean, I might as well have a turret in the backyard. I see I've lost my camera again. Well, we'll get it back, I'm sure, at some point. But anyway, so my wife caught a little video camera, a little image of me when I was walking around the backyard. And she, and by the way, guys, I'll ask again, throw me some emoticons if this thing, okay, good. I think it's internet, but anyway, so, okay. Sorry about the interruptions. So she said, like, have you looked at your pictures? And she showed that to me. And I'm going like, yeah, okay, well, whatever. And then on my iPhone, it just so happened, you know how you'll get these like vignettes every once in a while that come up like, hey, summer 2012, it shows you all these pictures. So I saw some pictures. It just popped up of me around some pool somewhere. And I looked like a dumpy old dude with a big old barrel chest and man boobs and a big beer belly. And I don't even drink beer. And then I'm looking at the pictures that were taken by our camera. And I know I'm crying too. And I looked like great compared to that old picture. And so why would that be? Well, I ain't getting younger, but what I am doing is I'm consistently eating well. I won't get into my diet because it would offend some of you, but I'm eating well. I'm not drinking. I'm getting cardio. I'm still not getting sleep. That kind of sucks. And I'm doing resistance training. And I've been doing it for months and months and months. And I have not noticed one iota of difference in the mirror ever for me. Not one day have I looked at my physique and said like, wow, hey man, I'm getting better. I'm still the same old dumpy dude. But the passage of time, doing the right things has made a difference. I just didn't see it because I'm doing it every day. This is now enough about my personal crap. I'm not going to tell you what I was wearing. But the thing is, trading is the same way. You're not going to know whether you're getting better one day to the next, 1 week to the next, even 1 month to the next. It's going to take you months and months to really look at your performance and say, oh, I am getting better. And that's why you have to be measuring yourself. You have to be measuring your numbers, or look, you're just not a pro. You could still be trading. I was trading for a long time. As I look back now, I wasn't a pro. I was just trading. I didn't know my numbers. I didn't even know how to track them, whether I should track them. I was just trading, making some money. I'm a genius. Other times losing a bunch of money. I need to go back to practicing law, but I never lost that much money to where that was really something I would do. So the point is, if you're not measuring what you're doing, how do you know whether it's you? How do you know whether the money you're making is you, or if it's the market, or the money you're losing is you, or if it's the market? The reason you wouldn't know is because you got nothing to gauge it against. You don't have a belt size. You don't have a picture from a couple of years ago. You just have the now. So however you measure your trading, you can spend a boatload of money like I did, or you could get an Excel spreadsheet and figure it out. But one way or another, you got to track your trades. You have to. Okay. So what I did with mine is I wanted to make it actually fun. And Tom Petty, I loved that guy. I saw him once, never got a chance to meet him. I wouldn't have known what to say anyway. Hi, you're Tom Petty. But one of the coolest dudes around. His band always, when they're writing a song, this was their theme, like, don't bore us, just get to the chorus. In other words, like, make it fun. Don't wait. And so I put together something that really, really helps me in my trading, and it totally is fun. And what I'm trying to do is gauge what I'm actually doing as opposed to how I'm feeling about what I'm doing, because it's different. You can be feeling great about what you're doing, and you can still be doing lousy, but maybe you just had a good piece of cheesecake or something and you're on a sugar high. You have to know how you're doing. And so some of the things that I do is I want to get to this thing called trade expectancy. And these are actually complex calculations. You can look them all up if you want to go to Chat GPT or GTP, no, GPT. You can look all of these things up: batting average, average gains, loss. That's really easy. But like ratios, adjusted win-loss ratio, trade expectancy, they're a little bit more complicated, but you can do all that. And I'm sure you can program it into an Excel spreadsheet. But the ultimate goal is to figure out, like, should I still be trading or not, or am I going to lose my money? And then you should also be doing this: a percent return distribution, like of all the trades that I'm making within a particular time frame. Are they good trades or are they crappy trades? Now, I've had this one monster trade over here that totally skewed my numbers. But this is, where is it? It's weird when I'm looking at it. Yeah, this is the zero line right here. Anything to the left of this is a loss. Anything to the right of this is a gain. Now, I want to tell you, this is quite unusual. And frankly, this is just real stuff. I haven't made any, any kind of paper trade one to show you kind of what it's supposed to look like. But I'm just telling you, this is an unusual one. It is absolutely not a standard at all. But the thing that you want to be doing is, when you're looking at this kind of thing, this gives me an accurate representation of where I am. And this is good. My number of trades, which turns out was only one here in this time frame, was a loss of between 0 and 2%. So I had a minimal, basically flat. But then my gains were anywhere from, well, above 0 all the way up to whatever the hell this thing was. But they were from 0 up to about 34, 35%. But most of them were in the 10 to 12% range. Now, going back to the R multiple, a 10 or 12% range is actually pretty good if I'm risking 2 or 3, or actually even like 4% on a trade. A 10 to 12, really a 12% is pretty good. But if I'm taking these big wild risks, this is going to get me broke, because if I'm taking these big wild risks, you're going to see bars over here, and sooner or later it's going to send you to the local bar. So what you want to be doing on your trading distribution is, you want to see it over on the right. But you also, when you're looking at your numbers, you got to look at something like this and go, okay, this one, if I'm looking at my numbers, this makes me look like a champion trader. Okay, but it was an outlier. So let's get rid of that. Where's the reality? And then you see really just kind of this cluster in here. So some of this is probably just the market. So these are the things that I want to look at. And ultimately, I'm getting to this. I'm getting a summary of where I am. And you could see this in an old one here. It doesn't take anything into account here. I wish it did. It would be better. But so my batting average, I'm hitting 6 out of 10. Right. My average gain, 25%. Unusual. Okay. Don't pay attention to that. My average loss, 12%. Okay. That sucks. That's really bad. My win-loss ratio, well, I'm winning about twice as much as I lose. And my adjusted is 3.5. Okay. So if I did not take this one big loss, average loss, this one, okay, on the last August for 25%. I think this thing got away from me because it was just a one trade, maybe two. Okay. Anyway, that skewed my numbers. So what am I getting from this, though? Do you know what I'm getting from this? I got to look back at those trades, those two trades, and say, what did I do wrong? And maybe the answer is I did nothing wrong. I had my stop. It was all good. But then there was some adverse news and the stock gapped right down through the stop and never came back. And I had to sell it for a much bigger loss. That's going to happen sometimes, but it won't happen very often. So when you see a big loss like that, or two or three, that's where it actually gets good, because you could go back and look at it and say, okay, what am I doing? What am I doing wrong here? Because if I can figure out what I'm doing wrong, then I can fix it and make it right. And when I'm not making that costly mistake anymore, what do you think is going to happen to my numbers? Is this making sense to you guys? Are you getting this? This is really important. This is a heck of a lot more important than you understanding how to measure Bollinger Bands. I'll tell you that. I can teach you about just about any indicator out there off the top of my head for some of them. Others, I would be, okay, give me a couple hours. Let me get back to you. Then I could go study all this stuff about a particular indicator and sound really, really smart. Okay. It's not going to make you any money. It's not going to make you any money at all. What you need to be doing is focusing on price. You guys know which indicators I use. There are very, very few, but every single indicator that I use, if you said, well, why do you use that? I could give you a specific reason, and it wouldn't be, well, just because I always have. I could give you a specific reason or reasons for it, such that you would say, oh, so if he wasn't using that indicator, then he would be missing some information that it's important to him. And that's your litmus test for indicators. If you can't do that, like I don't use RSI and stochastics anymore. I used to religiously. And do you know why I don't now? Because I've been looking at charts for long enough, looked at millions of them, I'm sure, long enough to where if you give me a price pattern without RSI or stochastics in it, I can tell you within a fair degree of certainty what the stochastics or the RSI looks like, because I understand how they're calculated. And so I just kind of know. And this isn't me being awesome. You could do this too. I'm just telling you, you could do this too. My point is, you don't need half the indicators that you're using. You need a handful. That's it. All you care about are the ones that matter. If they don't matter, just because they're there, like the Arun, this and that, and the Heishi Riki, whatever it is, like all of these different things, do they make you money? If they don't make you money, why are you spending your time on them? Time is money. You trade for money. If what you're doing in your trading is not making you money, you are wasting your time. This is so important. I'll just skip right through this. These are the losses. Again, I already saw that graphically. Okay. And I think this is actually from a different deal. So this is my question to you. With this process, and I know I've gone through a lot of stuff here, and I've gone through some of it pretty quickly, and most of it, there's a lot of depth to it as well. But is this a strategy? Is this a way to trade that's meaningful to you? Does this work for you? Has it given you any new information? Because, somebody might look at this and say, and rightly so, I look at all that stuff, just I haven't put it together in a nice tight word like SMART. But this is what you need to do. And again, you're going to get this video so you can go back and you can take notes on all the different nuances that I've said. Just don't tell anybody about the ring photos of me in the backyard. I was actually going to cold plunge and I wasn't wearing very much. So I'll probably have to eliminate this. She's not home. She didn't know. Anyway, so this is, I'm hoping, what's helped you and gotten you to this point, to where some of the, and maybe you didn't even know you had the questions. Okay. But you got to be feeling like you've got some better handle on your trading, to where, frankly, I'd like you to look at this, and it is 2:35. So we've been on for what, an hour and hour and a half, we'll say, hour and 20 minutes. Has this been time well spent for you? Is this something that has really, really worked for you? Because that's the thing. I'm not doing this for me. So that's awesome, guys. I'm so happy to see that. Now, here's the thing. And you probably had a sense that I'm working up to something. So I've given you what I consider to just be scratching the surface. And if you think back of all the different parts of it, whether it's stock selection or measuring or risk management, stuff like that, there's a lot more to it than that. But that is the basic template. And you can take this and do a lot with it just as it is now. So you can just kind of keep doing what you're doing and just go, yeah, that was a good webinar. I wish his damn camera hadn't frozen a couple times, but that's life. I guess it kind of blew through my stop. But the other thing is, like I said with my picture comparison, it takes a while to make changes in your trading. And if you throw me a bone here, I'm serious. If you have been to a workshop and you learned a lot from that workshop and you came away from it going like, this changes everything. And then 6 months later, you've realized that it really hasn't changed anything. It was an awesome workshop. You learned a lot of good stuff, but somehow 6 months later, you're still kind of the same trader that you were before. Does that happen to anybody other than me? Okay, I've spent hundreds of thousands of dollars on workshops. Most of them, I think there were one or two where I didn't learn a damn thing, like nothing, only how not to do something. But most of them didn't matter how much I paid for $10,000. I paid $100. I could always learn something. But most of them aren't going to change the way you trade over time. It's like Tony Robbins. You go to Tony Robbins, what is it? The personal power things where, he gets so excited that afterwards he has to lay on a bed of ice to cool down. Sure, buddy, whatever. People go there and they go like, yes, this changes everything. Take massive action. And then next year they're back at his workshop again. They haven't taken massive action except paying another tuition for another block of ice show from Tony, or walk on coals and hope that your feet don't get burned. The bottom line is it takes a while to change, and you really have to dedicate the time and the energy in order to do that. And I haven't talked about this, and I'm not really going to go into detail. There's a lot of detail here. Discipline is not where it's at, baby. I'm telling you. You can say, and everybody talks about it like, oh, I just need to be a more disciplined trader. I think there's a book called The Disciplined Trader. I'm sure it's good. But discipline is not going to get it for you, because like you can be disciplined. How many former alcoholics are disciplined? They like, oh, I don't drink anymore. And then one lapse in discipline and they're back drinking again, and it's a downward spiral. I've seen that happen with people that have been very close to me. It's really kind of tragic to watch. But the point is, discipline is not going to butter the biscuit for you. You have to, and you can't just say, well, I just need to get rid of my bad habits. No, you don't. You cannot get rid of your bad habits. Bad habits do not just go away. You can't get rid of them. You have to replace them. You have to replace those bad habits with good habits. I quit smoking 3 different times. I never smoked in my life. Well, a couple times on ski patrol at 10,000 feet, and that's a buzz. But never smoked. But then when I was back in New York running money in a hedge fund, everybody there smoked except me. And all it took was one day. I was really, really tired. And the guy goes, hey, man, why don't you come out and have a cigarette with me? And that was it. Off to the races. The next thing I know, I'm smoking over a pack a day. I think I actually went up to 2 packs on a couple days, shaking like crazy. So I decided to quit smoking, and I did. I totally quit until the next ripple came on in my life, which was like a day later. And then I went and got a pack of cigarettes. That happened again, the same type of thing, until finally, and I'm talking to you now, I'm going like, wait a minute, I need to learn more. I need to learn more about this thing called nicotine, this thing about addiction. And so I studied. Happily, the internet has a lot of information on that. And I studied how to break the habit of smoking. I also studied what is the biochemical mechanism that makes me crave smoking so much. And now there's two things, and I'm not turning this into let's all quit smoking here, but I want to make a point here. Two things. First of all, there's the physical thing, the doing something. I mean, who was it? The guy, I forget his name, the guy who wears the leather jacket. Dice Clay, the Dice Man, Andrew Dice Clay. He hasn't smoked in decades. He's always got a cigarette. He's got one tucked behind his ear. Why? Because he just uses it. So it's a hand thing. And then the other one, and this is the deadly one, is it's the way your brain processes nicotine. And I'm not going to get into it here. I'll just say this, that as long as there's nicotine in your system, you crave it. And when the nicotine starts dropping down, you really crave it. Like, I got to get more nicotine. But if you get to a point where there's no nicotine in your system, you have broken the chain of physical addiction. And what's left is this, because after 3 days, all the nicotine is out of your system. And you smokers, I dare you to try it. All the nicotine is out of your system. And then at that point, any craving that you have for smoking is just is just the hand to the mouth stuff and all that. So once I got that down, I realized, okay, other than holding my breath, I can do just about anything for 3 days if I put my mind to it. So I put my mind to not smoking for 3 days. I had it marked on a calendar to the minute of when my 3 days was done. And then at the same time, as I was going through that 3 days, I did what a lot of people do. I started chewing gum, but then, and not Nicorette. All that does is make it worse, only you feel better. And I also just started having toothpicks, stuff like that. And it was still difficult after 3 days, but that was it. Third time was the charm. Never smoked since. Why am I telling you this? I'm telling you this because you have to realize you cannot break bad habits. You have to replace them with good habits. Are you getting this? Like, you can't say, I'm not going to take any big losses anymore. You can say that all you want, but it doesn't mean you're not going to take a big loss, because think about it. What have I said at the beginning? You're afraid of taking a loss. Nobody wants to take a loss. I'm afraid of taking a loss. I can't take a loss. I can't take a loss. And you wind up getting your ass wiped out. Why? Because you take a loss, because you're afraid of taking a loss, but the stock doesn't care. Stock doesn't care whether you're going to take a big loss or not. It does what it does, and you do what you do. And so that stuff doesn't help. But if you say, well, I'm no longer afraid of taking a big loss, what I'm actually afraid of is not having my risk defined before I go into a trade. Because as long as I have my risk defined, I know what my maximum loss is going to be. Now I ain't scared, because I've got my R multiple. I've looked at things and I get it. I see it. I could lose, could absolutely lose. It's kind of a coin flip, really. I could lose, but I know how much I'm going to lose. That's the max. I've built in failure into the trade. That's your toothpicks. That's your toothpick. That's your habit that keeps you from taking big losses. You've replaced the fear of taking a loss. You've replaced plunging. You've replaced all of these things that are causing you to get, let's just say, suboptimal trading results. You've replaced them with good habits. Suddenly, you're not the disciplined trader. You're just the good habit trader. It makes a difference. And it also makes you a smart trader, not a hard trader. I guarantee you, man, the hardest trading you're ever going to have is when you're losing money. That's been my experience anyway. When I've had those periods in my life when I've been losing, when I've just, it's like I seem to buy calls on every single stock that implodes. And I seem to buy puts on every single stock that gets an upgrade in a stock split. It's happened. But once you get through that and you have good habits, none of that stuff happens, guys. It just doesn't. And you'll be amazed at what your results look like on the camera in the backyard when you're going to the cold plunge, when you're measuring yourself all the way through. It totally makes a difference. And so here's the thing that I want to challenge you to do. I'm sure you get this by now. None of the stuff that I've given you is a magic bullet. So, oh, suddenly I get everything. Dan has given me the keys to the kingdom. No, I haven't. I haven't given you a damn thing. I've given you a template, but that's it. There's nothing magic about any of this stuff, and nothing about it is going to change you in a big way. It's not. I'm just telling you, I want to frame your expectations. You're not going to come away from this and be a markedly better trader. Now, if you apply some of the things that you're doing here, it will improve your trading. But see, the deficiency isn't in the material. The deficiency is in you, and it's in me. It's in anybody who can look at the mirror and see somebody looking back. You want to look in the mirror and see a winner looking back. Even if you're not winning now, that's okay. You're starting where you're starting. You're a winner in training, baby. That's the way it goes. But it has to start small. You have to start with the toothpick and the 3 days, whatever it is. You got to start small, and gradually you replace these bad trading habits with good ones. And what I want to challenge you to do is just be a little better version of yourself. Like, even just go look at the losses that you've taken. Track your go back and look at your last 10, 15, maybe 20 trades, print out the charts, mark where, and this will make you money. Mark where you bought, mark where you sold, look at the dollars that you put in, look at where your stop was, all that stuff. And you go through 10, 15, 20 charts, I guarantee you will spot your tendency. Guaranteed. I promise you that if you do the work that I've just told you to do, you go do that homework, you're going to look back and you're going to say, oh crap, I'm buying too high. What am I doing? I'm buying too high. I'm not drawing my boxes. I'm not doing this. I'm not doing that. Or, oh my Lord, I see these violations and I keep holding the stock. Like you're going to see, or yeah, I crushed this trade, but I only put like 1% of my account in it. It didn't mean anything. You're going to find your weaknesses. And once you find your weaknesses, then you can get on with the practice of changing. So you can do this on your own. And I'm giving you, like, Bill O'Neill's book, How to Make Money in Stocks, it's a seminal book. I've read it probably 13 to 15 times, and I'm still marking it up. Mark Minervini's written a couple great books. He teaches a workshop. I think it's either $5,000 or $6,000. It's a 4-day course. I've taken it, I think, 4 times, but I'll tell you this, it's what it is in the book, and that's the thing. But there's something about the live presentation so you get a lot out of stuff like that. John Carter at Simpler Trading, he trades mostly futures now. He's a great trader, an amazing trader. So you can study all these guys, but we can also do it together with me. And because I put something together, I've been marketing this. I actually haven't really been marketing it. I've been too busy to market it, but I have taught a course promoting this, which this is as well here, what I'm talking about here, in December, because people wanted to get a tax break. And then I think I had one a couple months ago. But I'm giving you really a choice to do something that's really special that I've never done before. And you can do this. Everything that I've given you, you can go do on your own, or you can do it with me and you can make, let's see, you can make shall we say, an investment in this. And I'm trying to, I don't think I can, I'm still new to all this stuff. I would put I would type in the link to the chat box, but I don't know how to do that. So if you want to go and see what this is all about, and I'm going to lay it out for you, but if you want to see what it's all about, just go to Stock Market Mentor /MTM. And I'll get to that. But I'm going to tell you a little bit more about this, though, because it's really important. So how much is what I'm going to show you? How much is this worth to me? I'll show you exactly how much it's worth. It's worth, as of now and counting, $379,005. And this is what I'm talking about, that trade tracking mechanism and something else that I haven't shown you, has cost me since 2018. It's cost me almost 400 grand in programming fees. And I had a couple buffoons. One of them was my brother, that were in partners with me, which were two of the dumbest things I've ever done in my life. And that list is long. So to be right up at the top is really, really impressive. So I had to buy these guys out early on, but then I've put all this programming into this, and it's ultimately totaled. I just had our bookkeeper give me the latest. Thank you very much. Another 65 grand. So it's almost 400 grand that I've put into this. And do you know why? Honestly, it really hasn't been for you. I mean, it has been because I've always known I was going to make this available to others, but it was because like it means that much to me in my trading results, because I love to trade and I really love to trade profitably. So this has been a big expense for me. So in this course, this is what it is. It starts the weekend after Easter. I've wanted to do it earlier because it's been way too long. I was just telling my wife the other day, for crying out loud, I've been planning this course for 3 damn months. Like, let's get on with it. But it's like one thing after another was an issue. So I kind of squeezed it in after Easter and before, I think I actually on tax day, whatever it is. Anyway, so this was the best time for me to do it. But it's a 4-day course, and this SMART stuff that I just taught you, that's like half a day. I mean, I'm teaching you so much in this course. This is the most ambitious and extensive class I've ever taught by far. So you're going to learn, in my view, everything you need to know to ultimately become a professional trader, if that's your aim. Personally, I recommend, I'm probably the only guy on this end of the microphone that would ever say this. I recommend that you not think about becoming a professional trader. Oh, I want to trade professionally. I want to be a professional trader, like trade my own account and stuff like that. I'm just telling you, that's a bad aspiration to have. You could do it, but it's so far in the future for most of you. And the reason is because you don't understand that your mortgage comes due every month. And if you don't make money in 1 month, then you're going backwards because you still got to pay the mortgage. The bank is never going to look at you and say, well, partner, we really took it in the shorts this month, did we? You know what? Let's just deal with it next month. Life gets in the way. What you want to be thinking about is not becoming a professional trader, but becoming a consistently successful and profitable trader. And if you can get to that, then it's just a question of bankroll. That's literally all it is. If you can trade consistently profitable and your numbers are working, you can trade professionally. You could retire and just trade for a living. All you need is the money, because you've already got the technique. So you're going to learn a lot in this. I guarantee you. It's going to be the best course you've ever taken. And you're going to learn why in just a minute. So teaching you all of this stuff, I assume most of you can read. So I'm not going to be talking about all of these things. But what we are going to do is we're not going to, I think I didn't count. Last time I counted, I had over 150 charts. Um, I think probably close to 200 charts. But here's the thing. We're not going to study all these patterns like, oh, there's this, there's that. We're not going to do that because most of the patterns don't matter. They're just like organized chaos to where somebody who wants to appear smart can say, oh, this is a triple flutter blast pattern here, and this is a three-winged wombat. No, we're going to study only the patterns that matter, and we're going to get to know them so damn intimately that you're going to name your cat Volatility Squeeze. You're going to teach your kid how to stand on his head because your favorite pattern is an inverse head and shoulders. Just make sure that he doesn't get a flat head and call that a basing pattern. The bottom line is you're going to learn a lot about the very few things that you need to know. Okay, so what you're going to get is this. I haven't even shown you or told, I'm telling you about it now, but I'm not going to show you because I don't have enough time for that. You're going to get a breakdown of Stockwatch, which is it's another app. It's a related app to TradeTrack, which also goes into that expense. So it wasn't just TradeTrack, where I keep lists, and I'm the only one that farts around with them. I'm the only one that curates them. Lists of stocks that are meaningful to me. Maybe it's stocks and volatility squeezes. Maybe it's just like a focus list of stocks that I'm looking at now. I have scans and screens on MarketSmith, on TC2000. I'm actually now using another source, which I won't get into detail, but I do a lot of work finding stocks, and I'm going to be able to do a lot more once I release this thing. So what it's going to do is, I'm talking about time and money. If you decide that you want to use Stockwatch, I'm going to save you so much time because you're going to be able to access a list of stocks that fits the exact parameters that you're looking for. That's the purpose of this. And I've had people ask me, hey, well, I can't afford MarketSmith. I know you look a lot at that kind of stuff. Like, what else can I do? And TC and all that. This is the answer to that. So I'm going to be teaching you all about that stuff. I'm also Scott McGregor. He kind of knows this, but I haven't really finalized it with him. But he's going to be teaching. We're going to have, I envision having like an interview format where Scott's going to be, we're going to be going over cryptocurrency in a way that you're not aware of. And then also Andrew Kwong, he works for Microsoft. He's really one of the main guys in their AI development department. Last time I talked to Andy, he has a team of 50 programmers in 3 different countries that work for him on AI. So he's actually White Path in our option market mentor. He's putting out trades. He learned to trade options from me. He's infinitely better than me now. But anyway, so I'm going to be doing a deep dive with him on the state of AI. It's a lot more than NVIDIA. And we've had several conversations about it. And I've told him, like, dude, you got to share this. This is awesome. And so Andy's going to be there as a guest speaker as well. So included in this, you're not just going to, of course, you're going to get a workbook. Duh. It's going to be an annotated workbook as well. I'm going to give you another copy of a workbook that I'll be using when I'm doing the presentation with all of my notes in it. And the reason I'm doing that, I have really, really bad writing and I'm not going to make it better. The reason I'm doing that is so that you can sit there if you want to, and just focus on what I'm showing you, as opposed to writing like, oh, well, wait a minute. What was that? What was that? So I want to give you everything you need in order to get the most out of it. I'm not just going to get you recordings of all the sessions. I'm not putting them together in some fancy package. As soon as we're done with the session, I'm going to have that recording processed, formatted, and then we'll get it out to you right away. And the reason is, I'll tell you exactly why, because I've been doing this stuff a long time, and listen to me, because this may be you. one of our members, I was talking to him a while back. He's actually in our VIP program, which you don't know about. And he said, you know, I took such and such a class, and I'm not giving any names out, but I took such and such a class, and it was a pretty good class, but I didn't get a whole lot out of it. And here's why: because it was on a Saturday. I had to take my kid to soccer, you know, or I had to do this or that. I didn't have all day to spend on this, and certainly not all day Saturday and all day Sunday. I have, like, it's 4 letters, LIFE. I have a life. And so he wasn't able to get like the afternoon of the second day, stuff like that, because he had stuff to do. And so I was thinking about that, and I'm going, well, that's kind of a bummer if you miss, like, let's say you miss Saturday afternoon on a Saturday, Sunday course. You miss Saturday afternoon, and then Sunday you go like, well, I don't even know what's going on. So I'm fixing all that with this type of thing. I'm fixing that by saying, as soon as I get these to you, you can watch them. So if you needed to go take your kid to softball, or you needed to go shopping or something, it's not a problem. Okay. So, and I've already sent this out because we actually have a pretty full class already. I'm doing this now because I had committed to doing it. But we've already got people that are reading this pre-workshop reading list that I've been giving people. So this is the deal. I'll just lay it out for you. This is a $3,900 course. I screwed up. It actually is a $3,900 course, but I thought it was $3,500 just today. And so I called our marketing person and go like, you got the wrong amount down. It's 3,500, not 39. So they changed it. And then I realized, no, it actually was 39. But it's 35. But here's the deal: just until the end of the month. And is this like a special act now? Yeah, it kind of is. That's exactly what it is. I'm not going to insult your intelligence. But here's the thing. Let me go through this. And again, if you just go to stockmarketmentor.com /MTM, you'll see the sales page. You'll see it. And so you may want to check that out. But let me tell you about like how this thing came to be. And I've already gone through some of this stuff. I paid $1,900. Actually, it was $2,000 several years ago to go to a one-day class in San Francisco. Same guy just taught this one for $1,900 in Miami. I had a workbook and a stale bran muffin. No recording, no nothing. I've paid this almost $4,000 for a 2-day option course with a bunch of indicators that I don't use. There's a lot of different ways that you can spend a crap ton of money taking seminars. There are people like Zoom. COVID was like the worst thing for them because they couldn't go to live seminars anymore. They had to take them online. So people love going to seminars. But this is what the issue was, and I've already gone through this. There's no follow-up. That's not a deficiency in the course. You get what you get. There's no follow-up. There's no review. There's no reinforcement. There's no encouragement. There's no continuity. You take the course. Tony Robbins goes in the back room and lays on the sheet of ice while you get all excited and you're going to take massive action, and then nothing happens. It's the same thing. You're interviewed in the back of the room after some course, some trading course, and they're asking you how you feel about it, and you're talking into the camera, and I just lost my camera again. You're talking into the camera, and you're going like, oh my gosh, I'm going to make so much money. It's going to be awesome. But the one thing that these trading courses have is they're making a lot of money and you're not. And so these big businesses are they're basically making money on you, and they're trying to do the right thing, but I think they're doing it in the wrong way. And what really gets down to is this: are you satisfied with the results that you're getting, or is some of this getting to you? And so the question is, with respect to these courses, is does your investment, not just in money and in time, does it translate to your bottom line? And so I've always had this saying. I think it's actually a pretty common one, but I, for whatever reason, thought it was original. And this is while I'm trading on a freaking broken lawn chair using a TV tray and a laptop as my desk. I'm going to do what others won't. So someday I can do what others can't do. And so I think really the question is for you, do you feel that way? And are you ready to make a commitment? And it takes a commitment and not a commitment to come to the course. If all you want to do is come to the course, please don't bother. It's expensive. It'll be a waste of your money, whether it's $39 or $3,500 or $35. If all you want to do is come to the course, it's a waste of your time and money, because while you might get pumped up about it, you might say, oh, I could do this, I could do that. Oh, it's awesome. It's going to be great. 6 months from now, I'm just telling you, it's not going to make much difference. Now, you're going to get the recordings. So if you watch them on a regular basis, yeah, you can change. Absolutely, you can change. But you need to have some kind of continuity. But if all you want to do is come to the course, don't. I'm going to be teaching it. Well, not here. This is my home office and my camera's gone out. So I ain't going to be doing it here. I'll be doing it from my office that has better equipment. But if you're only going to do this, seriously, you don't get to meet me. There's not a nice cocktail party afterwards. It's nothing. So you've got to really commit yourself to making a big transformative change in what you're doing, because that's what I'm doing, not just in my business, but also in this course. Now, check this out. This is what you're going to get along with this Stock Watch app. It's a curated series of lists that I guarantee you is going to cut your time down. You're looking for volatility squeezes, go to Stockwatch. You're looking for stocks with strong fundamentals with 3x3s or 9x9s. These are fundamental and technical scans that I have. They're all right there. You don't have to do anything, really. Okay. That's going to be, I'm going to charge $100 a month for that. And it's not going to be a special price for members. It's for anybody. It's $100 a month for this. And you're also going to get Trade Track. That's that app that I showed you. I'll probably have to spend about half a day showing you the different nuances of that to get you to a point where it's fun for you, to where you're looking at this and you can see charts. In fact, I'll show you. I hadn't really planned on this, but sure, why not? Okay, so these are open trades. So like, let's say these are your trades. You're going like, okay, well, what did I do on, what about IBIT here? What about Meta? Okay. What did I do there? Oh, I bought here. I sold here. Did I sell all of it? Oh no, I just took some. I had 42 shares originally, so I took 20 off the table. So I made this much money, 26, 25. Ultimately, I got this much. I got a P&L of 24%, but I still got 21 shares on the table. So you can see this graphically, what you did and when you did it. You can look at like MicroStrategy, which is kind of awesome. By the way, you're making notes. You know, you got to keep a journal, right? Here's your journal. If you want to make something that's just generally speaking, hi, generally speaking. Okay. Boom. You got a journal entry. Hi, generally speaking. So you can track your trades this way. You say, well, I want to see what the heck I was doing here. All right. Well, guess what? I sold way too soon on this. This is NVIDIA at 150. This is NVIDIA at $200, right? Well, wrong, because I still have shares. I sold 10 shares here, started with 25. So I still have 15 shares. Yes, I sold too early, but at the time, it seemed like the right thing to do. But what did I do? Seeming like the right thing to do can sometimes be a little complicated. So I said, you know what? Let's just let the rest of it ride. We'll see. I got a nice profit here. I got my stop in place, 1485 currently. I'll be raising that soon. But this is how I track my trades. And by the way, I got a question for you, and you can give me a thumbs up or a thumb down or a middle finger. Does this look like it would be kind of fun, actually, to do? I mean, it is for me. When I built this thing, And it had gone through a couple iterations. When I built this thing, for the first time, like I'm going like, okay, now I can see exactly what I was doing. I can see exactly. That's when it really dawned on me. Well, I knew this, but then I became like, I really knew it, that selling in scales, selling in fractions is absolutely the way to go. How do you think I would feel if I bought it all there, sold it all there, and I see this chart? Like, you kind of feel like a dope when you sold at 1,000 and the stock's now been up as high as 2,000. So these are the kinds of things that you learn. And then, by the way, I go to my closed positions. It's a bunch of them. I can sort by like when's the first ones that I bought, or how about the most recent ones? When did I sell? What are the most recent ones? Okay, so I sold this one. I want to go back and look at this and say, okay, what happened to this one? Stuff like that. So I can go through and I can look at this stuff. I go, okay, well, let's look at this. Oh, I want to see what the chart was. Okay, that turned out to be pretty good. That was a good move on my part. I had the patience to wait, hoping that it went up above 84. But then when it started trading below the 50, or excuse me, the 20-day moving average, I see the sideways drift. I'm going, you know what? It's fine. I'm done. So you learn a lot about yourself. And by the way, do you guys think this can make you money? This isn't going to give you trades. You're going to get nothing from Trade Track. You're not going to get one trade idea. But do you think it will give you a better idea of what you're doing, right, what you're doing wrong? And if you are look, there are other trade tracking tools out there. I built this from scratch. I didn't, but I've hired several programmers to do it. But there are other trade tracking apps out there. So I'm not going to tell you otherwise. There are. Go get them, but get something. Figure something out, because if you are not tracking your trades, you ain't a pro. You're not going to make money consistently. You won't. Like Andy, my Microsoft AI secret weapon, he tracks his trades. We were talking, he does them on, he's got all these option trades and he's got these big, long Excel spreadsheets. That guy knows exactly what he's doing. Not because he's super smart, he is, but because he tracks his trades. So people that are pros track their trades. You ask any professional trader what their numbers are, they'll be able to tell you. If you ask any amateur trader what their numbers are, they think you're talking about like betting on March Madness. Like, what are the odds? They don't know. They don't even know what numbers are, but you damn sure better know what your numbers are. And by the way, this is an awesome resource for paper trading. And I hadn't even thought about that until somebody who's been a beta tester told me. They go like, I'm not even trading right now. I'm using it for paper trading. And man, I'm learning a lot. So this is a great, great resource. And I'm going to be teaching, I'll be showing you a lot of this in this course, but I'm going to be really supporting this until we get going. Also, this is just going to be next Thursday, a week from tomorrow, for those that are in this class. And again, we already have a lot of people in, but I'm going to be having a live Zoom call. You're going to have your notebooks. So we're going to kind of go over them, so you're not sitting there at 8 o'clock in the morning on Saturday wondering what's going to happen. It's kind of like you're already going to be started. And so also, because I value learning, I want you guys learning. And so $500 off. If it's a $495 course, no, you're not going to get your $5 back. But I'll give you a $500 coupon to use on anything in the library, including, like I'm planning on, I can't promise it, planning on teaching 59-minute trader again in a whole new way later on in the year. You can apply this to that. So that's going to be I think that's going to be a big help to some people, because a lot of people, like, they wait all year for Black Friday and Cyber Monday to get deals. So here's your Black Friday, Cyber Monday deal. But wait, there's more. Here's the thing. This is, in my view, the real value. Remember how I said up front, if you're doing this, if you just say, oh, yeah, I got nothing to do for 2 weekends, I'll spend them with Fitz on a Saturday and Sunday looking at my computer all day long. It's not going to be all day, but it's going to be several hours. It's going to require a commitment from you. But if that's all you're thinking about doing, I don't really feel that you're going to get the value out of this that you should. So what I'm going to be doing is, for the rest of this year, I look at this as like a 52-week continuity course. Once a quarter, I'm going to be teaching, and I'll plan on holding this on a Saturday because it'll go several hours, I'm sure. If you guys would like to have it on a Wednesday night, fine. I have insomnia. I'm up anyway. But I'll have these review sessions where we're going to be reviewing part of the course, and so that you can get all your questions answered so that I keep you on track. These are your toothpicks for good trading, for quitting smoking. I'm going to keep you on track for a year. And what I'm going to be doing is I'm going to be challenging you throughout the year to be tracking your numbers and to getting the most out of the learning that you have done, whether it's from me or yourself or anybody else, of putting into practice the learning that you're doing, actually doing it, not just being able to talk about it, so that you've got the pictures of yourself walking through the backyard, going to cold plunge, looking at your trading results going, well, a year ago, I was kind of a fat slob, but I'm not perfect, but I'm looking better. So this is what these are all about. I'm going to challenge you to be tracking your trades so that next quarter, you're going to be able to say, okay, when I started, my numbers were this. Now they're that. And then 2 quarters from now, you're going to say, okay, my numbers are here. My numbers are there. So I'm telling you, I'll promise you, seriously, that if you do everything that I'm going to show you and follow the instructions, and it's easy to do, but you have to do it. If you do everything that you need to be doing, you will become a better trader. No question about it. And guess what? If you really think about it, you know that that's true as well. Everything that I'm talking about here, and this is just some goofy couple of hours where I'm rambling on into a camera that works sometimes. You will become a better trader. And so really, the question is, it's kind of like, do you want to pay money to me, or do you want to pay money to the market? Because one way or another, that money is going out of your pocket. And so the question that I would ask you is this expensive? Is this a lot of money? And I would say it kind of depends. Is it really? How much money are you losing in trades that you look at and you say, I shouldn't have made that trade? Because that's how I look at this. By the way, why do you think I spent so much on this stupid trade track thing? Like hundreds of thousands of dollars, because I know what a difference it makes for me. And I'm 66 years old. I plan on being around for another 30 years or so. I don't think I'm going to make 100, but I'm damn sure going to make 90 or 95. I don't want to be trading like a mope 10, 15, 20 years from now. I want to be the best I could possibly be. And so that's why I put in the time and the money and the patience and the creativity into this, so that I can make it something that's really, really useful to me. And I kind of think that you should be doing that for you as well. But that's a choice that you need to make. I'm not going to sit here and browbeat you. I'm just making this offer to you. And you can go here again, just the domain /MTM, and you'll see all the stuff here. In fact, and I got more to show you here because there's something else that's pretty cool. It'll be cool for one of you, but only one. Okay. So ignore this. I'll get to that in just a sec. So this is what you get. Just go here. They didn't change all of it, but $3,500. Okay, fine. All right, whatever. So, and this is just me calculating this out. This is almost $10,000 in value. If you see this, and maybe you don't see it, and that's fine. Like I said, if all you want is the course, probably not worth it, because you're not going to be able to, at least in my view, unless you're really determined and you watch the tapes a bunch of times, you're not going to be able to take what I'm showing you and just say, okay, perfect, I've learned it all. This is so awesome. You need some continuity and you need some support. And that's exactly what you're getting here. So it's really the whole package. It's not just 4 fun-filled days with Fitz. It's a 52-week journey to get a better body image on the Ring camera a year from now. Okay, so there's another one here that this is actually an idea that a friend of mine gave me, and I'm hoping that I don't come to regret it, but I created an all-access VIP program for a very limited number of people, and I'll tell you why in a second. And I only have 1 spot left, not 2, just 1. And it's okay if that spot doesn't get filled. And you'll know why in just a minute. So here's what this deal is. It's roughly a $50,000 value. And you can't just, I think you could go ahead and buy it, but that doesn't mean that you're going to be getting in. You may be getting a refund, because it's really an application thing. If you have 15,000 to burn, I don't want it. That's not what it's all about, because I'm putting in a lot of time into people in this program. And it's a lot of personal time for me. So you get access to all this stuff, to any new courses that I'm teaching, all of the stuff, the website, Stock Option, Crypto Market Mentor. You get access to all that stuff for a year. Also, just anything I do, you get access for nothing. Okay. And also, and this is, I've never done this before. You get one-on-one time with me for 5 hours, and you can actually, I haven't promoted this, and frankly, I'm probably going to take it off the website, but I think I'm charging $1,500 an hour for this, minimum 10 hours, something like that. I don't like to work with people one-on-one because it takes a lot of my time. And that's it, but I will. And so I've already had people sign up for this because they want to do this, and it will actually be fun for me. It's just a lot of work, because I guarantee you, if I'm going to spend 5 hours from you, I'm probably going to be giving you 10 hours or more of my time, because there's more to it than just meeting one-on-one. There's looking at trades. There's me looking at your stuff before we meet, stuff like that. So these are intense sessions, and I just don't have that much time, but you can use it however you want. So you're going to get access to all of this stuff. And then also, I'm going to meet with this group every month as opposed to every quarter. And one of the things that we're going to be doing, which I think you should be doing this yourself if you've got a small group, a hot seat format, to where it's, okay, the camera's on you. What's going on? What are you doing right? What are you doing wrong? What are you having problems with? Hey, everybody, this is a trade, or this is whatever that I've been having trouble with. I don't know what the heck's going on. Anybody have any ideas? It's like many minds focusing on the same thing tend to get a better answer. The wisdom of the crowd, smarter than the smartest guy in the crowd. So we're going to be working on that. So you're going to be getting into this very, very small group of serious traders. And this is something that I doubt that I'm going to be doing after this year. I might be, but this could just be a one-off. It just totally depends on a lot of things. And so you can kind of go 2 ways if you're interested in this at all. But I'm just asking for this. If you say, well, I want to go to this course, I'm just asking you to not look at it as a 2-weekend course. Look at it as a 52 week hero's journey. That's what I'm at. That's the mindset that I want you to have. First day in this course, I want you to be looking at this saying, you know what? This is the first day of the best year of my trading career. This is it. I can't, okay, all right. How come his camera's not freezing? It did last time. Okay, so this is the way I want you to look at it. It's not a flipping 2-weekend course. I could do that crap in my sleep. You could too. You probably would be sleeping. This is a year-long commitment that you need to make, not me. I'm already committed. It's my job. Okay, you need to make the commitment, and not to me, but do it to yourself. Do it for yourself. Make the commitment for yourself. Okay, so questions. What do we got? Do you guys have any questions at all? I know I've been talking a lot. That's what I do. So if you've got any questions, any relevant questions, you know what, guys? I'll stay here for 2 more minutes. I'll stay here for 2 more hours, as long as you're asking, as long as you're wanting information on this. And yes, you do get a recording of today. We're going to be sending it. We're going to be sending this out. I think as soon as it gets processed. And so, Michael, yeah, you're looking forward to Trade Track. I do it now on my own Excel spreadsheet. I'm going to get off the share here. I may come to regret that. Okay. Okay, so actually I don't. Yeah, I like it better when it's sharing. Anyway, so yeah, you'll get a recording of today. And Michael, yeah, once you get Trade Track, you'll be able to ditch your old Excel spreadsheet. But it is cool, isn't it? Like to be able to have that stuff. And okay. And yeah, I'm gonna put the front of this on the website, David, today. And then Terry, it's your birth. Hey, happy birthday, dude. Oh, it may be I don't know if Terry's a he or a her, but but happy birthday. You've told your family to pretend you're out of town. But it's not going to be from 8 to 5. We're going to start at 8 o'clock, and people on the West Coast are going to be going like, God, that's really early. Well, it's really not. The market opens at 6:30. But for those on the East Coast, that's 11 o'clock. Guys, you can't ask people to take a workshop starting at noon. So 11 Eastern, guys, that's the best I can do. But it ain't going to be 8 hours a day. It's going to be, I don't even actually I have the curriculum all done. It's awesome. It's like a lot. But I don't have it quite blocked out yet because I just don't. But I'm just going to make sure you're not sitting there for 6-7 hours a day in front of your computer, because frankly, then that just becomes a marathon and you're not going to, the mind goes blank after a while. So we'll make sure we get it in a way that you're getting the max out of everything that I'm doing. Okay. So let's see a couple more here. Okay, cool. Let's see. How do you factor in options X and yeah, Jason, I can't go into options trading here, but you know what you should do actually is ask White Path or Sam. Both of those guys are really good at options, and they will absolutely help you on that. So just go into the option market mentor trading room and ask. So my sessions cause you to implement stops, but need more changes based on this session and my mentor trading mastery course. Great. That's awesome, Bill. I promise you, I'm putting everything I have into this. My wife is actually kind of pissed at me a little bit. I mean, for a very good reason, because I've been spending so much time on this. I really, really am passionate about this. It's almost my legacy. So I've been instructed and applied S.M.A.R.T in calculating performance, and glad you used it for helping trading performance. Yeah. Very helpful in applying to improve my ways I look at trades. That's exactly right. It's if you do the same thing again and again, as long as it's the right thing, you're going to get the right results. Let's see. Yeah, I need to focus more on risk reward. Are the computations for these graphs available? I'm not sure. I may have already answered that question for you, Liz, in the rest of the presentation. I can see you asked this a while ago, but yeah, you get all the you get on Trade Track, you get all the different computations, and I'll be going into a lot more detail. I know a lot of that might have kind of been like wait a minute, what's that, I don't understand that. You'll get all that. You'll have a very, very firm understanding of this. And by the way, shortly after this, I will simply just be releasing Trade Track out into the wild, so to speak. So it's just that for people here, you're getting, first crack at it. Okay, fine. But just you're getting it for 6 months as a part of this. And one of the reasons that I like to do that is because if it's free, if it seems like it's free, then you will, because it's part of a deal, then you will tend to use it because you're saying, geez, I paid a whole bunch of money for this course, but I got this thing that I could use every day. Like you're not paying money for it. And so you're going to get to a point, because it's not costing you anything, to where you just come to rely on it. And then you'll realize, it's kind of priceless. Okay. So I've been measuring my portfolio value versus individual trades. I know I need to track trades, but is it wrong if the portfolio value goes up consistently? That's a pretty good, that's a that's a pretty good trade. That's a pretty good track. If you're doing, if your portfolio just keeps going up, don't change a thing. But yeah, if you track your trades, I think then, Bill, your goal would be to make it go up more. Like, what are you doing? Spot your flaws and say, okay, well, crap, if I didn't do this, or if I started doing that, then I'd be doing even better. So that's really the goal, is no matter how profitable you are, you can always do better. We could always do better. You're never going to shoot that 18 unless you golf with me, and we'll go have a beer on the fourth tee. We're done. Okay. Yeah, Jeff, you're 69 years old. I went to my 50-year reunion, came home and told my wife, time is the great equalizer. Keep doing what you're doing. Do you guys know what? I've only been to one of my class reunions from high school. It was the second one. The one when I was what was it? I graduated in 76. So in 86, I couldn't go to this will give you a window into my life. I couldn't go to my class reunion because I had a gig. I was in a band, and I had to play and make that money. Then I went to the next one, and I realized two things. First of all, I didn't have very much in common with any of these people. And also, I realized that none of them really worked out too much. So that's the last one that I went to. Maybe I'll go to the next one and say, hey, man, do you want to compare the photos that I had in 2022 with my photo that I got on my Ring camera when I was going out for a cold plunge? How are you doing? So anyway, let's see. Yeah, $1 to make three. That's really what you want, man. Okay, is there a split payment option? Robert, that's a really good question. I will tell you this, only with your credit card company. That's what, and I totally get it. That's a lot. It's a big chunk of change. It's a big chunk of change. I have to acknowledge that. And if I wasn't committing to doing this for a year, the price would be different, because then it's just like, I'm in, I'm out, I'm gone. That's it. But my feeling is that this is the best. This is going to be the best. If you're into trading at all, this is going to be an amazing trade for you. So just break it down in payments on your card. And if we had been doing, or if we were going to do something like this, we would be charging, an extra fee for that as well, just because it takes time and money to administer that kind of stuff. And also, there's not that much time. I mean, it starts in a little over a week. But you want to make that decision. I'm sure you make the right decision one way or another. This is not for everybody, no question about it. I'm not trying to tell you that it is, but it's right for somebody. It's right for a lot of people. We already have a lot of people that are in on this. So, and this will be the last. This will be the last marketing session that I'm going to be doing on this. And so I'm glad I did. But do your stops only alert you, or do they kick you out of the trade? No, if you're talking about the stops on Trade Track, I go into Trade Track every day and I'll look, and there'll be a notice that says, one of your stops has been triggered, and then it'll show me which one, and I'll go to it. I haven't even considered. I think it'd actually be something that's not very difficult for me to do, to have a program built in to where if your stop is triggered, you get an email alert or something like that. I mean, geez, I've spent so much money on this thing already. At some point, I want to say, like, Uncle, enough's enough. But typically, that's the kind of thing you're going to want to do on your trading software. You definitely need to have that stuff done. You got to be able to get some alerts on when your stop has been hit. That's super, super important. Okay. Robert, yeah, I think dude, I'm telling you, you're going to get a lot out of this. I do. In fact, this is what I'm definitely going to be asking for. This will be either humbling or make me happy. But at the end of the first day, I'm really going to be asking all of you guys, like, give me some feedback. Don't wait till the end of the class. I got time to fix things. Is this working for you? Because this is going to be literally a collaborative thing. We're going to be together for a year, for 52 weeks. You're going to be in my orbit. I'm going to be in yours. So we better get this stuff right. I know it's right for me, but I ain't the guy that's paying the money. You are. So we need to make damn sure that it's right for you. That's a huge, that's something that I really need to emphasize, is this is truly all about you. And I'll just kind of leave it there. This is your course. It's not mine. I'm not, some of this stuff, like the Trade Track and various other things that you're going to be learning, it's original thought. These are things that I've developed, that I've pioneered for me, just things that totally work for me. You're going to be learning a lot of things that are like Fitzpatrick originals. But frankly, most of the things that you're going to be learning are things that I've learned from other people. So I'm just walking in other people's footsteps, standing on the shoulders of giants, as they say. And you're going to be doing the same thing with me. And hopefully, I'll ask you this: you take everything that you're learning from me and help somebody else, like kind of pay it forward as they go. That was a really good movie. But use what I'm showing you and help somebody else. That's why I got into this deal, because I was learning a lot from other people. I learned a ton from Jim Cramer, various other people. And he's the guy that kind of got me thinking about pushing and doing what I'm doing now. And so I'm just happy that you're a part of it. I want to be a part of your world as well, guys. Whether or not you join me over the next year, I do appreciate you joining me in this session. So, guys, one more thing, Robert. Yes, you did miss it. The dates of the 4 things, I'll show it to you. I got to come back here because I'm not just going to say it. Oh, come on. Here we go. There we go. Okay. 6th and 7th, 13th and 14th. So it's not Easter weekend. It's the weekend after that, and then the following weekend as well. So you need to be there. I'm just telling you, dude. And I'm going to be looking for you. I'm going to be looking for you, Robert. If you were not on the list, Robert, I'm going to reach out and I'm going to egg your car. Okay. I'll see you there. Okay, guys, that's it. And I'm really not going to egg your car, but I might TP your house. That's for sure. So, okay. Well, thanks for hanging with me. Thanks for sticking around. Hope you all have an awesome day and evening. And if you have any questions about this, you can certainly feel free to email me, dan@stockmarketmentor.com. I'm happy to help you out in any way that I can. And you can also email Karen@stockmarketmentor.com. She's been with me since 2006. Yeah, she's been with me a long time. Geez. Anyway, she's awesome. She's a lot nicer than I am too. Most people are. So that's it. I'll see you guys next time.